All right, in this video, I'm going to walk through the recent message from the IRS indicating or telling taxpayers to hold off. Don't file your tax returns. There's some new information that came out, and some refunds that you received from your state could be taxable. So I'm going to cover that. Second, I'm going to cover another reason why you want to hold off on filing your tax returns, and then the third reason why you shouldn't be receiving a refund and why you shouldn't be paying any tax. So first off, the IRS message. So there's about 18 states in 2022 that gave away rebates to individuals, millions of taxpayers. And these rebates range from, small amounts to larger amounts. In California here, they issued this, it's called the Middle Class Tax Refund rebate. And it was to help individuals kind of cope with the rising inflation. Well, the state of California says, here's the money. It's not going to be taxable in California, but it could be taxable on your federal tax return in 2022. So they said, you got to wait. And there's, 17 other states that are kind of in the same bucket. So I'd be on the lookout for more guidance from the IRS. They should be coming out shortly on how to treat these rebates. Because what you don't want to do is file your tax return assuming that the rebates are non-taxable at the federal level, right, with the IRS level, and then having to amend your tax return, right? Because that's just going to, cost more money. It's going to spend more time doing that. You just don't want to do it. The second point I want to cover here is just holding off on filing tax returns in general, right? So whether there's going to be future rebates or other money going to taxpayers to kind of cope with different situations, it's just a good idea not to rush, right? Sometimes the IRS and the states, they open their portals to accept tax returns at the end of January, beginning of February, and there's a rush from taxpayers to kind of just file these tax returns. Well, we've seen it where people kind of rush, they want to get their tax returns filed, and it's like another box checked off their plate, but then come late March, April, they get some more tax forms that needed to be included in their tax return. So then they got to spend more money, they got to file an amendment, they may have to owe tax, right? So it's better just to wait and wait till the dust settles, because there's still tax forms being mailed right now. There's investment statement accounts, there's 1099s that are being sent out, K1s, right? So if you're an investor in a company and you receive a K1, most of the time those come out, in May, June, July, right? So you're going to have to file an extension anyways. So you shouldn't kind of rush to get your tax returns done. And I think one of the reasons, and this kind of leads to my third point here, I think one of the reasons why individuals want to file their tax return is they're anxious to see what their refund is. Well, this goes back to tax planning, right? If you're tax planning appropriately through the whole year, you're working with a CPA, you shouldn't owe any tax at the end of the year when you do your tax return, and you shouldn't be receiving any refund from the IRS, right? If you're doing your tax planning correctly. There's people that are getting refund checks of, $1,000, $10,000, $20,000. Like literally, we're seeing this. And if you're getting a refund check that big, that means that you're essentially giving the IRS a tax-free loan for 9 months out of the year, where in reality, you could have used that $20,000 for something. You could have put it in the savings account, right? I posted a video on Ally Bank where I think their interest rate now is on the savings account is 3.4%, right? So that's a couple $100 that you could have had in your pocket if you would have planned appropriately. So I guess the moral of the story is don't rush, right, with your tax returns. Let's see what the IRS comes back with on these state rebates, and then make sure you just plan during the whole year. A lot of people just fear taxes, right? But if you plan, you meet with your CPA, once a quarter, there's not going to be any surprises right at the end of the year. So if you have any comments, leave them in the comment below. And if you haven't subscribed to this channel, please do so. Thanks for watching.